What's happening, guys? Another Sunday scan. First and foremost, some housekeeping. Mike, Brian, Rodrigo, and John. You guys have mail coming. You should get it Monday, Tuesday, the latest. I appreciate your patience. Like I said in the last video and the ones before that, I'm only going once a month rather than try to get there every Saturday before noon. But those shirts have been shipped out. This week, we'll pick one person for Momo Traders, and that will be towards the end of the video, or maybe in the middle. We'll see. For those of you guys that are interested in potentially coming into Investors Underground, checking it out and whatnot, if you go to investorsunderground.com/secret link, we have a little bit of a flash sale for those of you guys that pay attention on these videos. Last week was nuts. The ideas, the thought process, the patience preventing pre-exhaustion, that could not have been more timely, right? So we kind of learned that on Tesla, or at least me personally. Not necessarily, horrible trades, but one of the main points that I've made in videos and things like that before is that everybody always says you can learn so much from your losses. It's true, you can, but you can learn a lot more from your wins. Maybe you got out lucky. Maybe you were reckless and you made a bunch of money. Maybe you were this close to having a really bad trade. Or in my case, Tesla, even if I made $5 or $10 a share, I was up 40, 50, 60, 70 plus at times, and I just did not take it in. And what can you take from that? What can you learn from that? And what was the opportunity cost of having that in my headspace while I could have been trading other things? So that was the idea and the thought process that I wanted to cover last Sunday scan, especially as SPCE was starting to come into A plus, once maybe a quarter style play. And as I've said over and over again, A plus setups happen maybe 3 or 4 times a month. Like I'm talking A plus. I'm talking the Teslas, the SPCEs, RAD maybe 2 months ago. I think it was in December, which was RAD, the one that I compared SPCE to. And these things do not happen all that often. Yes, there are weeks and days that have, a handful of them. But then it's a couple days go by, and there's no names that you were like, this is exactly what I'm doing off the open. This is exactly what I'm expecting. This is exactly what I need. And those, when they do all those things, when they do check all those boxes, those are the A plus setups. And so, again, we had those this week. We had SPCE. We had RAD back in December. We had Tesla before. But what I did wrong with Tesla was I was trying to kind of let it do what I thought should happen rather than what it was, suggesting, or rather what it was telling me. And I wasn't prepared on the washouts to cover, right? And what really caught me off guard was, being up $40 a share and all of a sudden it rebounds 25 in 3 candles. And as I've said over and over and over again, I'm stubborn at the end of the day. As a trader, that's my biggest flaw, is I need to really be aware of my stubbornness. And when I am being stubborn, a lot of times that, you're up 40, $50 a share, it pops back up 25. In my head, I'm like, I was just up 40, $50 a share. I'm going to wait it out. I'm going to see what happens. And that's not always the right thing to do. And as it starts to kind of grind and goes another 10, another 5, all of a sudden you're flat and you're faced with, do I stop out for flat or revert back to, I was just up a lot, what do I do? And it makes for some bad decisions. So with that said, I put out that patience prevents pre-exhaustion last Sunday because we had SPCE coming up. SPCE was a phenomenal trade. Huge opportunity, huge opportunity. And not only on the short side, but also on the long side. Each day, I kind of thought about this, and this is where I really shine, right, on SPCE type trades, because it really actually reminds me of back in the day with OTCs, when you start to have all these big promotional type of mailer plays, awesome penny stocks, if you guys remember that far back at this point, and they really act the same. And as far as anticipating potential range, anticipating where this stuff could really actually go, is something that I'm pretty good at. And so when these things come, I need to be, aware that I don't need to be early. That the big trade actually comes after that initial pullback. And you saw that with SPCE. You saw that with a lot of other names this week. So with that said, SPCE, as it was going, kind of upgraded, if you will, where I thought it could potentially go. That last day, I took it for the gap. I was expecting a potential 37 to 40 push at the close, and if it went to parabolic, I was expecting potentially 42, and we got right into that range, and ended up being able to flip to the short side, and then sized right in when it ended up cracking. So it just goes to show you that you don't need to be first in. You can even be $1 or $2 late and still get a good piece of what that trade has. And so that was like one of the biggest things that I wanted to go over and at least get you guys prepared for as these trades set up. We also had SDGR, which was another fantastic trade. Citron came out on it long, actually perfect timing for the most shorts, because it had gone up a couple days on the IPO, came back in, and it started to rally again. The market started to come in, and so SDGR just ended up unwinding to the lows. And about midday, right off the lows, Citron came out long on it, which is abnormal for him. Usually he's on the short side, but the last two, LK and SDGR, he's been on the long side. And if you think about if you were short, that was the point where it was primed to unwind. It had squeezed everybody out. It was at the lows, and all of a sudden, boom, it pops up $3-4. So shorts are already screwed if they held. And on top of that, it was easy to borrow. So it started to really compound over and over and over again, and really get shorts in a little bit of a pickle. So we let them kind of squeeze out, let them pre-exhaust. I tried it a few times, and it was an okay trade, but I could feel myself wanting more than it was willing to give. So I just said, you know what? These are the levels that I'm looking for, and that's it. I'm gonna be kind of patient until then. So I will get into the last point in a moment. Well, I'll switch over to the chart and show you guys that in relation to SPCE and SDGR. One thing that you guys can kind of take home. But the last thing I wanted to talk about was just a thought that I had this morning when I was leaving the gym and whatnot, and how much it relates to trading. And I thought about how many times you always see people, I'm starting the gym, and then you don't ever see a post again, right? So I don't post my gym stuff because I want to feel cool. I post it to kind of show that you need consistency. And if you can't find consistency in something as simple as working out, then I would not expect to find it in trading, because there's so many things that go hand in hand. And for those of you guys that all right, I'm gonna start going to the gym, and you go for 3 days, and then that's it. And then 2 weeks later, you're like, all right, this time I'm really gonna do it. I'm gonna start. I'm gonna stick with it. I'm gonna go. And this is going to be it. This is ground floor. No more excuses. I'm going to go. And that lasts for maybe 4 or 5 days, and then that's it. And you see these kind of people that post the treadmill and like, all right, day one is better than one day, et cetera, et cetera. But as you see, there's about 52 of those day ones a year, and so there's zero consistency with that. So what the point here is that it has everything to do with trading, right? Because think about, your losers. All right, that's it. This is the last time I'm going to do that. And then it's only as good as till the next time. All right, you know what? I know last time I said I was going to stop out at the stop loss or not take this type of trade, but now this time I'm officially not going to. And it's just the same kind of discipline that's needed. So what I was thinking and would recommend is, try to see if you can get the discipline to go to the gym, whether it's with a trainer or by yourself. For me, I know that I work out a lot harder with a trainer, so therefore that's why I go with my buddy Zach. However, see if you can get that discipline to go 3, 4, 5 days a week to make sure that you're actually disciplined enough to follow through to do that. And if you're not, then I don't know how you expect to be able to stick to the same stop loss plan every single time, because it's very, very similar. It requires the same type of discipline, and it's a good starting point, because you know what? You could join a gym for $10 a month and find out if you have the discipline or not, rather than losing thousands of dollars in the market. So try that out and let me know how it works. Back to SPCE and SDGR, and then we'll get into the scan. One of the biggest things that I kind of focus on or like to review, be aware of, is basically where volume is. And just because there is a seller at a certain level does not mean that every time it comes to that level, it's a short, or it's time to bet on it going down, or anything like that. Too many people doing the same thing, you're going to break through that resistance, and you're going to squeeze everybody out. And even if you were right all along, you're going to already be out, because you didn't give yourself enough of a buffer. You did the same thing as everybody else, and they already knew that. They knew what you were doing. So, a lot of times, this is a great example here where you've got kind of an idea that SPCE is ramping up, and it went up, I think this was pre-market, to about the 4150s or so. And then it starts to go up over here to 42s and change. And, they end up coming back. And, this was actually a newsletter suggesting a sell. They were long it, and it was a bigger money type, but not like a small cap kind of newsletter pump type atmosphere, but like a bigger one. And they did just enough to, the timing wise, it did just enough to crack it. But the point here is, had this come back up and you were just going to stop at this point right here at 42.20, 44, 42.40, you would have already been exhausted out, and that's it. You would have been right all along, but because you were trying to force the trade, anticipate the fact that it was going to stop there, that's what everybody's doing. So you can't do the same thing as everybody else. And, the same thing with SDGR. This was a phenomenal trade, and the thought process for me, you can probably see it pretty quickly, but draw this line across at 53, right? So I posted my chart. You guys can see it on Instagram, Twitter, but you can see how I traded it on Friday. But I was talking to one of my buddies, Helder, about the thought process that goes through a trade like this, or a trade like TOCA, I think it was, TOCA, which I'll go over as well. But how, in my mind, I think about sizing versus how most people do, and it's shown by how these things react, right? So a lot of people will make a decision based off of 53, right? And so they put all their eggs in one basket and only risking to 53. If it hits 53, I'll stop because it's probably going higher. And then they were right all along, but they stopped out because their stop was too tight. So typically what I do is I try to look for, where is the resistance? Where is the level that there was a seller, and where is there a little bit of accumulation? And on the way to, if you were paying attention on Friday morning, there was a lot of soaking at 53, and I noted it in the room. 53 is going to become a key level. Whether it's now, later, whatever the case may be, 53 is going to be that level that, if it starts to base there later on, it's probably going to squeeze. Or if it comes back to test it, it might be a level of resistance. But any trades that I take, and that's including shorting pops into any of these ramps, I'm not stopping at 53. I am okay with a push through 53, 53.50, and giving myself that buffer. And if I have that buffer, it allows me to be emotionally detached from the trade. And a lot of people are not detached from the trade. And that's just because you're sized in too big with a risk that's too tight. So stocks like this that have this type of range, you have to give yourself that buffer. Same thing with TOCA. How many people do you think were basing their stop right off of this level from basically noon, 12:30 or so? Right at 219 was the high there. So they're going to give themselves a 220 stop, right? They started in, it kind of looks a little heavy, it's coming back, I'm going to short pops, and I'm going to go ahead and stop if 220 breaks. High a day stop, maybe give yourself a few pennies. No, everybody did the same thing, and they squeezed everybody out for a dime, and then guess what? You were right all along. Now, it's not a trade that I took, not a trade that I'm interested in, but the point being is that it's a very big possibility that if you did trade that, you would have looked left and used that level. You would have been on the same boat as everybody else. You can see the volume associated with it, and you were right all along. Meanwhile, you covered at 230, you took a loss. So keep that in mind. Think about that kind of stuff when you're trading these things. That's what I do with, Tesla, SPCE, SDGR, and all these other different types of, trades. BBI, I think, probably had an opportunity like that, where, even if I'm using VWAP as a guide, it's not just a hard stop at VWAP. I want to be able to add. I want to be able to let it test a couple times. And the only thing that stops me out when I'm in either a starter or a partial position, not full size, but if I start to scale in, and I'm maybe under half size or below. The only thing that's going to stop me out is if it bases and starts to grind, right? If it starts maybe an ABCD type setup, if it starts to hold higher lows. But I want to give myself the best opportunity to basically let this kind of exhaust out other traders, which kind of goes back to the same thing that we talked about last week. So anyway, that's today's sort of lesson. And before I forget, because I probably will, Camille S. You get Momo Traders this week. So email me, webmaster@investorsunderground.com, and we will get you the book. And again, investorsunderground.com/secret link. You guys can check out the deals, the little flash sale that we did for this video. All right, let's get right into it. So TVIX. TVIX is an ETF. So a lot of you guys, if you don't know what that is, avoid it. It's not a stock. If you treat it like one, if you think it's one, then avoid. And it's not a ETF that goes up when the market goes down. Yes, it usually does bump up a little bit as the market goes down, just because typically the only time that the market goes down includes a little bit of volatility. This is a trade based off volatility, and it's a lot like probably options, where it's kind of where it's perceived to go, right? It's if we're kind of going down, but there's no real panic, there's no real fear, then it's probably not going to do too much. But when we have the fear of the unknown, and we're like, oh my gosh, are we going to go down 500 points today? Or we're going down 1,000 points, and nobody knows, and coronavirus headlines here and there. That's when these things start to kind of get going. And keep in mind, everybody's been trained to buy a dip. And I'm never trying to call top or anything like that. But what happens is we get a nice little breakout, pull back, everybody buys a dip, everything's good. All of a sudden, we come back and retest those lows. If we break that, I'm not even saying we're going to pull back crazy, but if we break that, that's a whole nother element of volatility and fear. And that's what's going to juice this stuff. So that's why I was interested in the long on Friday, Thursday night scan. I said, that was a little bit of a warning shot on Thursday, but I'm not sure that I just trust the market yet. So any sign of weakness, I'm going long TVIX, just because I know everybody's going to be, got to get long, got to take cover. And it was a nice trade. So with that said, usually I make good trades on TVIX or UVXY for the first, 1 or 2 days. And, they're big trades, they're nice opportunities. And then I end up giving it back slowly but surely because I overstayed, and I end up having some type of bias. You can't have a bias on these names. It's an ETF, it's not a stock, it doesn't do what you think. It's totally related to underlying, other underlying events and things, and securities and volatility, and it's not your normal trade. So I'm watching it. It's possible that it gaps up. Look, if we gap way down on the market on Monday, this thing's going to be sky high. And as soon as we find a little bit of a bid, this will start to fade off as well. So I'm going in with an open mind. I'm looking for volatility. I'm looking for edge. And that's it. It's an avoid for most traders. TOCA, same thing we were talking about earlier. Nice squeeze. I got long on the one break, anticipating that little breakout there. What was surprising to me on Thursday was how fast it came back, right? So it pretty much gapped up, faded down, and unwound, and then it kind of skipped back up. So you know that shorts are likely in a bind. So the Thursday night scan that I put out, my goal was a weak open and then potential red to green for a breakout, just because shorts were probably twisted. Very easy to borrow street wide. So anyway, I got long. I made it to about 120s, 137, 138 was the top that I sold. And then obviously you could see that it went a little bit higher. And by a little bit, I mean a lot. So anyway, nice base at 185, 180, 185. So far, 220s area of a little bit of resistance. It does not mean that it's the top, but that's the channel that I'm looking for, right? So 180s to 220s. And I want to anticipate that it could rip through 220s, and then I'd be reactively trading that, or I'd be looking for heaviness under 180s for the potential unwind. But anything in between that channel, you can't be emotionally attached. Otherwise, it's just going to, flush you out to the bottom or squeeze you out to the top, and you might have been right all along. So I'm always aware of where that channel is, because I don't want to be, like a ping pong ball going, up and down in between it and exhausting myself, because that's what happens. SDGR, no idea. We had a huge flush, great covers. Again, you can see the trade. I posted it on Friday, but it's a attractive IPO. Bill Gates is super involved, has a majority stake, I think, or at least owns a lot of the float shares or whatever it was, I forget. But he's got a big piece of it. And so when big names are involved like that, a lower float type name, super easy to borrow street wide, you get moves like this. And you can go back to JMIA and things like that. It's as long as it has some type of story and some type of players, it's very possible to have a huge open on the IPO. And this one's set up perfectly. On the daily chart, you can see, it kind of opened up, unwound, nobody cared about it, and then all of a sudden it came back. And then this is the wick we always talk about. And then Citron came out on it. Citron also attracts shorts, right? It's up too much on his tweet, on his report. Whether or not you like him or whether or not you hate him, who cares? But a lot of people will take the opposite side of him at times. And if that's the case, you got squeezed. So right now you can see wicks are getting bought up. And I also think that we have a potential of a buy-in situation in the coming weeks. So if we start to base at 50s, we might have that next 55, 60, 65 type breakout. So I'm going in with an open mind. If we open weak and we're 48, 50s and we're holding that level, then I'd look for the fade. But I expect the volume to really pull back if we're under 50s. If we start to churn over 50, then we might start to see some breakout volume, maybe a 10 million share day over 60, 65, something like that. But I'm not making a call on this thing yet. It's been acting super strong. Every time it flushes out, I even made mention of it in the room. It flushed out so many times, and you had to be there. I got partial fills a couple times, but I was really happy with the fact that I covered into the flush. So that's always my hardest. When you're on the right side, you really want it to unwind. But then you actually got to look at how far it just faded. And, sometimes no matter how much you'd like it to fade, you can't always try to be a hero. BLPH, this one's been fantastic. You guys saw the trade earlier in the week from the trap this day. And I went over this on the pre-market broadcast. So for those of you guys that are members, I would suggest to go back and review what I said. It does not mean it's a layup type trade, but what I do is I look for the stars to align. And when all these stars align that I went over, then I look for the next piece, whether it's a PR, whether it's some type of positive change of events, or just even simply a breakout. 820, 850s is your key. I would not buy a breakout on this thing. All along, the first day I had a great trade. and I ended up selling into the rips, held some over, bought the week open, and sold into the rips again. In the last 2 days, I bought the weakness and sold into the 820 range, 810, 820, 830 range. Because as I noted, we need to see that 820, 850 built. That's the trigger spot. And if it doesn't, then there's no sense being patient with the trade. You have to know what you own. There's risk here. At some point they're going to need to raise. But I compared it to a couple other names that we've seen this same exact setup before on, where we have 25 million, 24 million shares, go to 5 million, go to 500,000. And that's the situation that we have here. So if there is a decent amount of shorts left and we do get some type of positive anything on this, then we've got some possibilities here. But for now, you should assume that it's going to fail. You should assume that you should know what you own. It's not a layup trade. All the stars are aligned, but we still need to check off a few boxes. So this happens every now and then, and it's very rare that we have all these boxes checked. So now we just have to wait to kind of see what happens. So if you have any confusion on what I'm saying or the comparison, you guys can go back through the broadcast. Just click study groups and review Friday's video. SPCE, I kind of took a hands-off approach on Friday. I saw a lot of people forcing it, and flushes out and comes back, flushes out, comes back, and it's difficult. It's very easy to get too patient on this thing, and again, you'd be right all along, right? You're getting short for the potential fade to the lows. You pretty much would have nailed it if you held to the end of the day. But this is aggressive, and especially if you're trying to size in and whatnot. So higher the better. Potential more unwind. Just like I said with Rad, we've been talking about it, and don't underestimate what can happen on the backside, right? So all gap ups, I think, are going to be met with some fades, but we'll see. I mean, we haven't seen this type of volume. So this one was about 48 million, 50 million on this high day, but we haven't seen volume like this in a very long time on stock like this. So we traded over 300 million shares in 3 days, and then this was 45 million. So lower the better, but at some point we might start to have some buy-ins again, and then we have that bounce. And then that bounce is what's going to be the most important thing to, one, make sure you take in profits, and two, don't try to short the pop too soon. Be patient. But once that unravels, then we're going to probably have that slow, steady fade. With all of that said, who knows? Just like they said on CNBC, it could be a Tesla-style stock where everybody's now tucked this away. It's traded 300 million shares. It's so spread out that it just doesn't even matter anymore. And maybe we have something that actually holds 30 to 35 in the long term. But for right now, we're going to have some big whipsaw type moves. We can take advantage of that and then move on. But ideal world, gap up and then fade. Otherwise, gap down, flush out, maybe something as crazy as 30 to 28, and then a rebound back up to mid 30s. GMPX was a great one. This one had an offering midweek. Fortunately, was there for it. Literally right on the filing, as you guys probably saw. I posted the chart as well. Hit the filing right away and got a good piece of that move. Now, what I had said in the room is I did not expect it to actually hold the weakness. I expected a lot of buy-ins to come in into the week's end, and unfortunately, I can't trade them all. I didn't trade this one for the call that I made, but I expected it to stay strong, and the reason for that is we just saw it on CODX. They have put through a bunch of offerings and a few of the other ones recently, but they just are not breaking down right now because everybody's anticipating that offering, so they're already all short. And then if they don't hammer it down right away, guess what? Shorts get bought in, and here we are. So I am watching this one. You can see the wicks over here. You can see basically 550s, 540s, we'll call it. And then maybe up to 570s from that first move. But I want people to forget this. So I will set alerts. I will set, levels. And then I'll be looking to trade it when everybody else forgets. Otherwise, you're going to be just kind of fighting with everybody. And if you've watched it, when it breaks down, the snapback comes right back up. Breaks down, snapback right back up. And so that kind of shows you their hand that, everybody's already on the same page as you. Rad, higher the better. Every single day it's been, higher and higher. You can see how the VWAP can help you on the daily. Nice little base. It starts to grind. Every day it's actually sold off. So this is kind of the reverse wicks that we talk about. And I actually look for these, just like on SPCE, when we talked about this as well, when they bring it down into the close, and they kind of let shorts feel good about it. Let shorts feel good about it. And it keeps on going higher and higher and higher, and all of a sudden they've got too many. So great opportunity coming up. Where we stop, nobody knows, but I'm not going to try to find the top, but I think we're going to have a $2 per share trade soon. So whether or not we go 18, 19 and blow it off, and then we fade it back, or if we just hit a wall at 16 and we go back to 14. Either way, I'm going to be patiently waiting for that setup. ETFC, this one I always forget to keep them on radar. MS, especially if we start to pull back, if the markets are down, tomorrow. All these banks, etc. Gold's been going up, so banks got a little bit of pressure. But with that said, this is not a per share buyout, so there is still a trade here. And the first day when I shorted it off the pre-market, I said, don't take it off radar. We might have a 2-2-2 type of pullback, consecutive days pulling back. This reminds me of, started with an L, OCLR and LITE, LITE. LITE had bought out OCLR, and they both gapped up that day. I don't recall when it was. Probably a while ago now, but they both were in tandem. They were both trading in tandem, but they both faded nicely. So look, if MS keeps on coming back, we're going to continue to have a nice trade on ETFC, and it should be a great opportunity. So, we easily could come back to 50 in the coming days, and it'll be a great trade. With that said, if banks rally, gold pulls back, then, maybe we don't. But for now, I like all failed follow through momentum versus VWAP. So anyway, those were failed follow through potential setups. The prior ones were the main watches. I forgot to mention that. Continuation setups, AVDL. This was a great breakout on Friday. I did not take part in it at all. But what I'd be looking for is some type of weakness off the open, maybe 920, something like that. Consolidate and then look for that breakout, red to green, over 10. Depending on the market, what happens, there was a lot of coronavirus, I think it was South Korea, so we might have a gap down, so that might kill this trade, but I'd be watching that. CLDX, this one, nice breakout. I said I loved it for a pullback and an entry around 285s. Or risk versus 285s. So I did get long there, but as it started to kind of rebound to 290s, I just kind of ditched it. But I do have a small swing on it. Hopefully dips. I don't want to be long if 280s can't hold though. So, I mean, that's going to be a level. If this is going to continue to hold trend, it's got to hold 280s. Other than that, DSS. This one is an abnormal type of trade, but it might be kind of a special situation type of trade. So, in an ideal world, lower the better. Hopefully it has a weak open and then rallies back red to green. In which case, I would probably be part of that flush. And the thought process here is they just raised, and not ZOM. We just saw a major move, very similar situation. And it's just really about understanding what kind of market we're in right now, what's working, what's not. And this is working right now. And so ZOM just had raised, then went nuts. And so the situation here with DSS is, if we get some filings, some ownership, Form 4s, et cetera, and we find out that somebody took, whether one of the directors or CEO, whatever, took a big portion of that block, or maybe one fund takes it all down, then that might not hit the market. And if that's the case, everybody that just made decisions based off of that raise is going to come back up. So in an ideal world, flush, use 15 as my risk, and then rally back. If we get up over 2022, then we have potential of doing something crazy. So that's what I'm going to be looking for on that one. Verb, I've been there. You can see a nice setup over here. You can see the wicks we talk about. So I got involved this week and just been kind of buying dips. I am not looking to chase this thing. I'm not looking to buy the breakout. I want to only buy weakness as long as the overall trend holds. You can see that it cleared this prior resistance, these ones, and so now we're coming into some other bigger resistance. So we'll see what happens with that, but like the setup so far. DEAC is the DraftKings IPO. As I said before, I put it on scan last Sunday and also the Sunday before that. I called it a potential mini SPCE. They both came public through SPAC, Special Purpose Acquisition Corps, or companies. So my goal is lower the better. Same thing I said with SPCE. So if this pulls back $1, great. I want to see it come back lower, lower, lower. And then as long as the overall trend starts to get bought, dips get bought, then I'm interested. SPCE did a lot of this, kind of create that trap. And then, the volume started to churn, then we started to go. So lower the better. But as you can see, they keep on buying it up. So I'm looking for that kind of action and those wicks. And you can see here how I had this same setup, cracked, and then came back hard. So I'd be expecting and hopeful of that. And then if it comes back, then that's starting to prove my thesis. And at which point I would start to scale into a winner if it starts to clear prior resistance. APT, I started in on Friday. Just general kind of trend join. PAVM, keeping a watch. Once again, that should look familiar. We talk about these wicks all the time. We talked about it last week on Scan. We talked about these wicks. So great breakout there. I'm just staying familiar with it. I don't have a position on it, but I am looking for potential either trend join for parabolic day, and then maybe look for that correction day. Other than that, just fly through a couple of the others, just ones that I'm familiar with. Again, I'm going to repeat myself like I do every single week. I'm not looking to trade every single one of these. I set price alerts. We have a nice feature in the room where I can just put through all my tickers, what prices I want to be alerted to. And as I'm just sitting in the room, it'll pop right up. I know that some services have those. I mean, E-Trade has them, or maybe Scans or Trade Ideas, maybe not. But it's all about where your eyes are and whether or not you see it, right? You get those price alerts, you see it on your phone at the end of the day. That's not helpful. So we have it pushes right through the chat room itself, so you can't miss it. So what I do is I find a lot of these charts that I like, and you know what? If it came here, I'd be interested in buying. If it broke out here, I'd be interested in buying. And I set those, so then now the chat room tells me. So with that said, PW, this one, Paul, Super Trades, has been on it for quite some time. For a long time, he's been buying, but it finally broke out. I didn't realize it was only like $1.5 million float. So these are the types that can go pretty wild. So I'd be looking to see if trend holds. It might be a nice opportunity versus 12. At this point, if 12 doesn't hold, you can see that support over here. I probably wouldn't want to be involved, but so far, nice trend. FTFT, no position, but am looking. Once again, you can see those wicks. Somebody's in there, nice consolidation, and finally a breakout. So I'd be looking to see if dips hold versus basically a buck. REKR has been a swing for me. Once again, you get the wicks. They're buying up the weakness. All of these are getting absorbed. So there's obviously a buyer there. You can see the exact area of resistance. So 485 is your key, and then maybe over 550s or so. So I think 485, if it starts to base and it looks like it's going to kind of push towards that 5, I'd probably start to add to the position. But no rush here for me. It's weakness type trade. SNSS, no position, but just watching it. Nice buyer here. And, this one had a big volume day. 28 million shares or so. It's been steady up since. So we're in some big areas here. I'd have to do a little bit of due diligence and catalyst or review before I get involved. But for now, you can see once again we talk about these wicks getting bought up. So there is a buyer in the tape. So I'm interested on washout days like this. And then Can got a hit piece right at the lows. Terrible timing. It just had a huge squeeze, came in, and then they put out a hit piece right at the low. So that shorts are very fresh and trapped. Came back up, held the trend all day on Friday. That was an idea to kind of join the trend long. I'd be looking dips versus 570, 580s. And you might get that buy-in, that reversal day, and if they have any PR or any reason for Bitcoin to go nuts or anything like that, then we have a possible trade here. But other than that, it's not that exciting to me. I have a few others on watch, just price alerts that I'll set, and I have the list down on Scan. But that's about it. So again, I'm just going over charts that I like. I've got my main watches. I've got some failed follow through momentum. As usual, my goal is two or three main watches. And then I might add like 2 more. And that's from pre-market. I want volume. I want liquidity. I don't want to deal with the low float type, 50,000 shares traded type stuff. I'm aware of them. And sometimes I try to take advantage of what I think might happen with newsletters pushing them and things like that, just like TSRI on Friday. Newsletter came in. They kept on buying, and they all end the same way. And I think TWMC, same thing. Newsletter comes in, buy. They all end the same way. And even the last candle that had this big wick, even this day, and I think even this day, was all the same newsletter. So be very cautious on low volume type names. Again, if you have any questions, reach out. Hopefully you guys saw the presentation that I put out yesterday. It was a pretty good one. I'm getting a lot of good feedback. I also put out the kind of the thought process behind the BLPH trade midweek this week. And just kind of taking some of you guys' feedback from the comment section and trying to produce some good content for you guys. So have a great rest of the weekend, and we'll see you in the room tomorrow.